William, thank you very much for being here. What do you pin on some of these recent rebounds? What are the key drivers?
Well, I think what we've seen is as Wall Street recovers, Bitcoin and crypto overall recovers. And keep in mind that almost all tokens are tightly correlated to Bitcoin. So wherever Bitcoin goes, the other tokens tend to go, and usually by some multiple if they're popular. So Bitcoin goes up 30%, Ethereum might go up 60%.
So there's that kind of risk on appetite taking place.
Yes.
Tether and others came forward earlier this week in support of Ethereum's proof of stake transition, which is also, I know, big news in the crypto world. It's expected to be less energy intensive as well. But is this where you see value creation going forward?
I do. I think maybe with the exception of Bitcoin, all popular chains will be proof of stake, meaning they will use very little energy. They will be not using the traditional miners that Bitcoin uses, where they compete with each other and they generate a lot of computing power to do that competition. So Ethereum, of course, is the most used blockchain from a developer standpoint because it has smart contracts and whatnot. But I think in 5 years, virtually all chains will be proof of stake.
What do you expect to come out of this period when you've had some parts of so-called DeFi really, come up for question? You've seen the failures in some of the lenders and things like that. And I think still a reckoning, or some people trying to figure out exactly what the legitimate uses are and what's going to come after it. Right. How does it play from here on out, do you think?
So I would just say one thing first. I don't think there's been any issues with DeFi, true decentralized finance applications. It was CeFi, the centralized finance applications masquerading as DeFi, that had issues. So Celsius and BlockFi, and then the things like Luna that were used by both of those to generate a lot of returns. But I think most of the major DeFi applications and protocols did quite well, even with substantial volatility.
Bring it to, I guess, more of a practical level to make that distinction. What are the types of activities that you felt were not really DeFi and therefore have really not right. fared well?
So if you think of decentralized finance as mostly about using on-chain assets and doing everything on-chain, using smart contracts, so not a lot of human intervention, and it being fully transparent because anything on the blockchain you can see. So you could see if somebody was hypothecating the collateral you gave that smart contract to get a loan.
Right.
Whereas with CeFi, it's like any other, it's like a bank.
Right.
It's just owned by individuals. Those people took that collateral as deposits, and they never revealed what they did with it. And of course, what they did with it is they put it into very risky applications, and I don't think fully understood the risks that they were taking with customers' money. So if anything, I think the transparency of DeFi has really awakened people to the fact that this is probably the right direction, and CeFi lending applications will have a harder time going forward.